Hi guys, so let's look at how we could have captured a big move in Nifty just by using stop loss method. Okay, we had a consolidation right here before we could get a big move to the upside. So what happens when a retailer looks at this big move is he goes long and he places his stop loss below these consolidation zone. Okay, so this becomes a point of control exactly in the middle. This becomes a point of control. So all the stop losses will be placed below these levels by the retailers. The big institutions will always know that the liquidity is lying right here. So what they do is they come back to take the liquidity and then move or continue with the momentum. So let's see what happened the next. So the next day the market opened right around these areas. And we can always see there's a break of structure to the downside because the market is trying to come and grab the liquidity which is lying right at these areas. Okay, so market gives a retailer a bullish momentum telling the market is going to go up. So the retailers go on a buying and place the stop losses down below, and this is clearly known by the big investors, and then they come down and eat your liquidity and then take whichever side they wish to go. So here what we can see is the next day we can see the break of structure to the downside. Okay, we got a break of structure to the downside here, and again we got a break of structure to the downside here, and again we got a break of structure to the downside here. We can also see that the price is always making lower structures. Okay, we can see that the price is always making lower structures. It's not breaking the higher highs, but rather it is creating structure to the downside. So this is a clear indication that the market is moving to grab the liquidity which is lying around these areas. Okay, so what we could have done is we could have seen only for shorting opportunity. So once we have the break of structure over here, so what we could have done is we could have waited for the retracement of this level, and once the price broke these levels, right, we could have gone for a shorting opportunity. So we could have entered short here and kept your stop loss above, and then target the next liquidity area which is right here. Okay, so here we can see that we clearly got a 1:2 risk and reward ratios. So this is how stop loss hunting is done.